Hey everyone, and welcome to Rare Liquid. If you're new here, my name is Ben, and I was an investment banker at JP Morgan for a few years. And today is going to be a video about the top 15 full-service banks. And in my next video, I'm going to be ranking the top 15 boutique banks. And full service means that it's a bank that offers M&A advisory and also financings via equity like IPOs, follow-on offerings, and debt. And so in the next video, it's going to be focused on boutiques, which is basically purely focused on M&A, the sexiest quote-unquote part of investment banking. And at the end of that second video, I'm going to be showing you the rankings of all 30 banks at once. So stay tuned for that if you're interested. Also wanted to give you a disclaimer that I don't want this to just be like a tier video where I'm just talking crap about certain banks or whatever just for the fun of it. Instead, I want this to be actually a very educational video. So as I talk through each bank, I'm going to be going through where they stand at the league tables, which is basically deal volume. I'm also going to be talking about the top groups at each bank so you can know which ones are the top ones, and then also kind of like what culture has been like, what has been happening with each bank. So it should just be a very, very informative video for you if you're interested in recruiting for banking, or maybe if you just want to watch this for fun. The last thing I want to mention is that the banks, I'm going to be talking about them generally as overall reputation / where I see each bank versus the top groups at each bank. So there are certain groups at each bank that are just really, really top tier, and that will provide like better exit opportunities, better learning experiences, better deal flow. But for our intents and purposes, we're only going to be focusing on the overall bank for each bank as I do the rankings. All right, with that said, let's go into the rankings for the top 15 full service banks. And so we're going to start off with Wells Fargo, which may come as a surprise to some of you who aren't familiar with the banking landscape, because Wells Fargo is a very strong, well-known brand name. And we're going to work our way from the D tier to the S tier, by the way. But anyway, so the strongest groups at Wells Fargo tend to be their energy group and also debt capital markets. And a lot of the way that Wells Fargo competes as a bank is to offer financings in order to win M&A mandates. So basically, to give you an example, if a company is trying to buy another company and Wells Fargo's on the buy side, then they'll be like, hey, if you select us as a bank instead of, let's say, Mizuho or Morgan Stanley, etc., then we can offer you a really good deal for your debt financing if you're trying to fund your acquisition with debt. And that's obviously super, super enticing. But with that said, Wells Fargo isn't really well known to be like super, super strong with their investment banking division. It's not their primary focus as an overall company. And so that, I think, is also why they really aren't on a lot of like the biggest deals. The next four that I have on this tier, I don't have a ton of information for, but I'm going to be going more and more, give you more detailed information as we go up the tiers, just because there's, I presume, more interest and also there's more information. But okay, so at the bottom here, I'm going to add in HSBC over here. And then this is a bank that has more of a strong presence in Asia and Europe and has a lot of focus as well on corporate banking. And then let's add BNP Paribas, which is a French bank, really, really strong, I guess, in France, but more of a regional player versus like an international player. And then Mizuho over here, which actually recently acquired Greenhill, which was at least a very, very strong boutique bank around 10, 15 years ago, on the level of, later on, we'll talk about like Perella, like one of the elite boutiques. And I think there's a bit of a tangent, but I do think that the reason a lot of people do choose the well-known big bulge bracket banks is because they've been around for a while and they're not likely to kind of disappear or aren't as dependent on a few rainmaker MDs who are just going to bring in all the deals, because if they leave, then the boutique bank could be screwed, right? Greenhill, I think, is one of those examples of an elite boutique bank that really, really just slid. And that's like, that has long-term implications on your overall career as someone who has worked at that firm as well, right? Because if you work at, let's say, like a Goldman Sachs, Morgan Stanley, JP Morgan, then you're likely going to have that brand name on your resume and people are going to know it when you try to move jobs. But if you were at Greenhill and then the firm basically has disappeared, then when you move to another company like 10 years down the line, they're not really going to like know what Greenhill is, right? Maybe 10 years later, it won't even really matter. But anyway, the Mizuho is a Japanese bank that's a larger player in Asia, acquired Greenhill. That's basically what I wanted to say. And then next on the list is Macquarie, which is an Australian bank. So these are in the D tier, but I also want to really, really say that any of these banks, they're the top 15 banks, like kind of going to a top 15 college, right? You're going to have a good experience. You're going to do well. in your career. You're not screwed at all at any of these banks. That's not really what I'm trying to say at all. This is just, where everything lies in terms of tiers or whatever. Next, let's go into the C tier. And we're going to start off with Deutsche Bank. So while I did say that elite boutiques, a lot of times they can go downhill, that can also happen with bulge bracket banks, which Deutsche Bank arguably was and / is. And then also Credit Suisse, which you can see is not on this list, right? Because it actually also recently got acquired because it was doing poorly. And you could also say Lehman Brothers and Bear Stearns back in 2008 all had issues, were acquired, right? So not every company, no matter how large, is safe, but I do think there's more risk with elite boutiques. Anyway, Deutsche Bank, as you'll see, and I have on the list here, number 16 on the league tables. And league tables are just basically like how much deal volume that the bank is able to bring in. And we're going to be looking at over the past 2 years, because I think in any given year, a lot of stuff can happen. But I think over the past 2 years, that's like a good representation of where the bank is kind of at. So anyway, strongest groups for Deutsche Bank are the Sponsors Group, which is the financial sponsors. You basically work with a lot of private equity firms. Regal, which is kind of just real estate, gaming, lodging, and then LevFin. So Deutsche Bank is a European bank that has been facing a lot of challenges over the past few years and has been struggling a ton, especially in the United States. Reportedly, the company hired a lot of MDs who have yet to bring in deals. So there are a lot of directors and fewer analysts. And that just creates this inverted pyramid type of issue where there's a lot of people who need a lot of things at the very top, and then the analysts are kind of just getting crushed. But overall, the company was known to have like a pretty decent culture, especially compared to the rest of the banks that we're going to kind of talk about. With that said, because the bank is not doing well these days, Deutsche Bank is reportedly also giving lower compensation. So that's kind of all these things kind of make it more in the C tier. Next, we're going to have Jefferies. And some people, if you're just focusing on the brand, may be thinking like Jefferies and Deutsche Bank, like these two maybe should not be on the same tier. First of all, the strongest groups at Jefferies are energy, healthcare, and PCA, which is private capital advisory. So Jefferies is one of the, if not the, actually is the leading middle market bank. And it's entirely focused on banking versus Deutsche Bank, or let's say like Wells Fargo, which we talked about, which has other arms and other parts of the business that they're very focused on, right? Jefferies is solely our bread and butter. Our focus is investment banking. And that means that the business is super, super focused on it, right? And so it's number 10 on the league tables. So higher than Deutsche Bank, even though it's focused on the middle market, basically meaning that it's focused on smaller deals. With that said, Jefferies still does actually work on billion-dollar deals, but maybe their bread and butter could arguably be more in the hundreds of millions or so. So Jefferies is known to have a sweatshop reputation, meaning that people are worked really, really hard, and senior MDs are often quote unquote bought from other banks. And so they're very kind of territorial, because it's not like these MDs have grown up together in the firm and they're like helping each other a lot, which I saw quite a bit at JP Morgan. Instead, there's no kind of unified culture. There's like all these MDs who have brought in their own clients, and they don't want to give them to other MDs, obviously, because they brought them in and that's how they get paid, right? And so there's a lot of guaranteed compensation for senior bankers, because that's how Jefferies like brings in all this talent, and that's how they've been winning all these deals. So not so great for junior bankers, but could be great for if you ever become a senior and you want to move banks. Like Jefferies could be a good bank to move to, basically. Last thing I want to mention is something that a lot of people give Jefferies a lot of flack for, kind of, which is that their CEO, Rich Handler, is very, very active on social media. You can look him up, I guess. I haven't personally seen a lot of, or any of his stuff really. It's just as I was doing my research, I came across this. Could be interesting for you to look into if you are interested. Next on the list is RBC. So they are number 10 on the league tables, and their strongest groups are PU&I, so power, utilities, and industrial, I think, something like that. Basically kind of like energy stuff, and then M&A. So they're the leading Canadian investment bank. I would say like in the C tier, if you were given these three offers, like I might lean a little bit more towards Jefferies if I want like a really strong M&A kind of like focused experience, I guess, kind of, or a bank that's really focused on M&A and their primary focus is in investment banking. But Deutsche Bank, like I would consider those two probably like pretty similar. RBC is like a little bit down for me, but still I'd say generally on the C tier, and I would still consider it above anything we have on the D tier down here. All right, so next up we are going to go into the B tier, and these are going to be firms that a lot of you guys are much more familiar with. So we're going to start off with Bank of America. So their strongest groups are healthcare, financial sponsors, and M&A. They're number 5 on the league tables. So similar to Wells Fargo, and also later as we'll talk about JP Morgan, Bank of America has a huge balance sheet, and they also use this to win M&A mandates. Something that's kind of a bit of a not as great about the company is that compensation is oftentimes below what the rest of the top bulge brackets banks pay. And some say that this is because of a lot of over hiring at the MD level. A lot of MDs who don't really bring in business kind of lower the pay for everyone and increase the workload on juniors for kind of like meaningless pitches, while the bank also refuses to kind of fire low performers. And so, everything always really depends on the group that you're in. And so you can have an amazing, excellent experience at Bank of America. But, recently one of the associates at Bank of America passed away. He was age 35. This was like all over the news. There was a lot of issue and talk about how Bank of America has like a pretty toxic work culture. And I just kind of wanted to explain a little bit as to why that is. Like, you have all these MDs at the top doing all these pitches, and then you have all these people who are super overworked. If you're doing really, really, really well at the bank, then you just are given more and more work. And then if the low performers aren't being fired, then those people who are overworked are just going to keep working, right? That's an overgeneralization because I'm sure not all Bank of America is like that. With that said, I think compared to the other banks in the list, Bank of America has kind of better deal flow. So let's kind of talk about some of these. So Citi is next, and this may be surprising, but Citi is actually number 4 in league table, so it's above Bank of America, but I do think Bank of America has better, more well-rounded groups overall versus Citi, which is why I would place Bank of America and consider them much more highly if I got 2 offers from Citi and Bank of America. So the strongest groups at Citi are M&A and sponsors. And Citi is kind of more known to have a global footprint and is particularly known for its presence in emerging markets. And this is something that's a little bit unique to the firm. Actually, when I went to MBA at Wharton, a lot of my international friends had a background from Citi. So this made so much sense to me as I was like doing more research and talking to people. So the thing you do have to know about Citi right now, though, is that it's going through a massive restructuring. So the company announced it would be laying off 20,000 employees in the next 2 years earlier this past January, in January 2024. And they call this project Bora Bora, which is kind of in poor taste because Bora Bora is obviously like a vacation destination, and they're calling this project of laying off 20,000 people, impacting all these lives, as like something kind of vacation related, right? I think that's a little bit in poor taste. But anyway, a lot of the firings and laying off will be mid-office, back-office people. So you could argue like the investment banking division is probably not going to be as impacted. But with that said, when your entire company is going through all of these layoffs and restructuring, there's going to be like a lot of instability. So that's something to keep in mind. So next we have on the list Barclays. So Barclays, the strongest groups are PU&I, sponsors, and healthcare. And Barclays is historically much more of a European-focused bank, and it's grown a lot of its US presence, especially after acquiring Lehman Brothers in 2008. Supposedly, the culture has gotten kind of worse and worse with a lot of the Lehman rainmakers that used to be there. Now that it's been, 16 years since 2008, a lot of those rainmakers have left, and a lot of the MDs that were there, including the Lehman ones, were kind of snatched up by other companies like UBS. And so there's like some rumblings that the new MDs are not as great, but again, overgeneralization for the overall company. Now, with that said, I think a really, really positive attribute about your experience at Barclays is that modeling is done within each coverage group, just as it is at Goldman Sachs, and we'll discuss that in a bit. But what this means is that if you are in a coverage group at a lot of these bulge bracket banks or any of these banks, let's say you're in healthcare or consumer or et cetera, a lot of times your modeling and the M&A work that you're doing could be outsourced to the M&A group because they know how to do it quickly, they do it the best. And so you don't get as much modeling experience as an analyst, potentially maybe as an associate as well. So if that is what's important to you, and I think financial modeling is like the most important skill you can gain as an investment banker, then, at least as a junior, then what's really great about Barclays is that no matter what group you're going to be in, you're going to actually get modeling experience. And that's a huge plus versus a lot of like Bank of America, for example, where it might get outsourced to the M&A group. So that's why like Barclays, I think, is still a great offer if you're able to get an offer there. Now, on the note of financial modeling, if you're watching this video because you're trying to break into investment banking, then I highly recommend that you guys check out Wall Street Prep, who is the sponsor for today's video. Wall Street Prep offers financial modeling courses so you can be ready not just for interviews, but your job on the desk as a banker. And what I really like is that they have you dig into financial statements and build models using real numbers, just like what I used to do at JP Morgan. They offer a lot of great courses, but the two I particularly recommend are the accounting course if you don't have any prior accounting knowledge, and the premium modeling package, which has been taken by over 100,000 students and goes over all the key valuation concepts I learned in banking like DCFs, comps, accretion dilution, and LBOs. Wall Street Prep has been around since 2004, and they help train employees at all of the top banks and institutions in the world, including at Wharton, where a lot of my former classmates took and attended live instructor sessions. If interested in any of this, be sure to use my code rareliquid to get 20% off, and I'll leave information for everything that I discussed in this video's description. And then next on the list, we have UBS. So UBS is number 9 on the league tables, and their strongest groups are M&A, FIG, Financial Institutions Group, which is like kind of working with other banks and stuff like that, financial institutions, and then sponsors. So this UBS is a Swiss bank that acquired CS in early 2023 when Credit Suisse was having a ton of issues. And this should boost its banking revenue and could potentially give the firm upward potential over the next like 1 to 2 years. And the firm is focused on being the kind of number 1 European bank. You know, I think at this point it's definitely more up there versus Deutsche Bank. Compared to Barclays, like you could kind of like the debate on that a little bit, in my opinion. But UBS, I think, has a lot of potential to be on the up and up. But in the next 1 to 2 years, like we'll kind of have to really see. Reportedly, a lot of CS, Credit Suisse MDs have left. And UBS has also hired a lot of Bank of America and Barclays MDs who potentially are not as chill. So UBS was generally more so known for having a bit more of a laid back culture. But when you bring seniors from other banks who bring in their culture to the bank, then the entire bank's culture changes as well, right? So that's kind of what I've been hearing about UBS. But yeah, with that said, let's go into the A tier, which is JP Morgan. And they are number 3 on the league tables. I hope you can tell that I'm not being biased because I was an investment banking analyst at JP Morgan. And I think a lot of people would put Goldman, JP Morgan, Morgan Stanley in the S tier. But for me, I think this is fair to put JPM in the A tier and not the S tier. So first of all, strongest groups are M&A, healthcare, which I was in, and LevFin. So the top groups, I will say, probably yield very similar exit opportunities as almost any other boutique investment bank, and also Goldman and Morgan Stanley. You'll still be extremely competitive. I just think that generally speaking, from what I've seen, let's say someone were to get an offer at Morgan Stanley and Goldman Sachs, regardless, or I guess it depends on the group. Like I would probably take JPM M&A over the worst groups at Goldman and Morgan Stanley. But for the most part, all else being equal, I've never really seen people take a JPM offer over Morgan Stanley and Goldman almost like 9 or 10 out of 10 times. Like I think Morgan Stanley and Goldman are just a slight tier above JPM because it's just a little bit better at banking. And what JPM does is very similar to Bank of America and Wells Fargo, is that because of having probably the largest balance sheet across all investment banks in the world, JP Morgan's able to get M&A mandates by offering financing, right? And so that's just a little bit different, right? If you're an elite boutique or if you're, just not really offering that kind of package and you're able to win deals because your advisory is just super, super top notch for M&A, that means you provide like really, really great M&A advice, right? And I think obviously like JP Morgan still does. I'm not trying to shit on my own company basically that I worked at, but I just think that there is a little bit of this gap basically. So next, let's talk about the S tier, which I'm going to put Morgan Stanley up there and then Goldman Sachs. And let's talk about each of these. So on the league tables, you can see that Goldman is number 1, Morgan Stanley is number 2. So let's talk about Morgan Stanley first. So their strongest groups are tech, which is in Menlo Park, and then media and telecom, which is more of a focus in New York. But I think they definitely call it MS Tech for the Menlo Park one. For the New York one, I think they call it Morgan Stanley MNT, but they maybe also call it TMT. And then there's M&A, which is also, of course, really strong. at every single bank. So next, let's talk about the tech group. The tech group in SF is kind of legendary in the sense that like if you're finance bro, especially if you're in the Bay Area, then you know about MS Tech. Basically, this guy named Michael Grimes is the head and he just like operates the whole thing. Super well known. And I would say MS Tech is on almost every single major IPO for a top tech company. So whether it's like Facebook or Uber, like you're going to see MS Tech leading that IPO more likely than not. With that said, like I do think what's not as well known is that I don't think that MS Tech is number one in terms of tech M&A. I do think it's probably up there, but Goldman TMT oftentimes takes the lion's share of that. And then Catalyst, which is we'll talk about that company in the Elite Boutique banking video. Anyway, so a few things that are unique about Morgan Stanley. One of which that I find to be a huge positive is that Morgan Stanley is supportive of analysts leaving after their 2-year stint and going into like private equity or whatever. Like the firm just understands that that is just how the cookie crumbles. With that said, of course, you can like have the opportunities to stay, I think. But Goldman, on the other hand, for example, does not like it if you're recruiting for your PE job in on-cycle recruiting. And I have like a bunch of private equity related videos if you want to watch some of those. But anyway, Morgan Stanley just overall really, really great deal flow and exit opportunities. Maybe not as well known as JP Morgan overall if you don't know about the banking industry. But when it comes to banking, Morgan Stanley is definitely in that S tier. Next, Goldman Sachs, their top groups tend to be TMT, FIG, Healthcare. And pretty much the strongest brand name across all investment banks in the world, period. Excellent deal flow across almost all groups. And it's kind of like the McKinsey of investment banks, I would say. So I think another very like strong positive for when you work at Goldman is that you'll have the broadest range of exit opportunities compared to any other bank that you can possibly list. And the other thing I want to mention is that Goldman has like what's called the quote unquote Goldman discount. So even though technically the bank could be paying its juniors similarly to elite boutiques, they know as a firm that a lot of times they don't need to because people will choose Goldman for the brand name. And that also could kind of be said of Morgan Stanley and JP Morgan and just bulge bracket banks in general, which are the ones you see basically in the S, A, and B tier. These are the bulge bracket banks. These banks pay a little bit less than the elite boutiques that we're going to be talking about. And then, well, in the boutique section, the elite boutiques, they'll pay more. But then just the boutique section, which the line it's not very clear where that line is. But anyway, these banks, even though they're more well-known, it may come as a surprise to some of you that they don't pay as well as some of the lesser-known elite boutique banks that we're going to be talking about. So that is an overview of the full-service banks. Hopefully you learned a lot from this section of the rankings. All right, so those are the rankings for the top 15 full-service banks. Hope you learned a lot as I was going through everything. And remember, as I mentioned in the beginning of this video, there will be the next video on the top 15 boutique investment banks and also the overall rankings for all 30 at the end of that video. So that concludes everything. And before I let you go, though, I wanted to let you know that I am building out my own how to get into investment banking course. That's going to be everything you need if you're interested in breaking into banking. And I am giving out 50% discounts for those who sign up early. I'll leave a link to it in this video's description. With that said, hope to catch you all in the next video. On the next screen, you'll see a video about me ranking the top 15 industries. If you haven't watched that one already, top 15 in finance, I mean. So yeah, thank you guys for watching. Hope to catch you all in the next video. Thanks guys and peace out.